You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amberdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amberdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amberdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody, that music means we are back. It is Monday. It is 2 p.m. Central. It is 3 p.m. Eastern. Do you know what's going on in the world of crypto derivatives? Well, let's find out together, shall we? It is time once again for the Crypto Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network upon which so many of you are binging. 3 shows, if not more, coming at you a day on the network right now. So make sure wherever you're listening to the Crypto Rundown, you are subscribed to the full network feed that will get you, again, over a dozen shows coming at you. And then if you're ready to take the plunge to go pro, theoptionsinsider.com/pro. 2 more exclusive shows, giveaways, live streams, exclusives, all sorts of fun. Even have a fantasy football league going now, which is wild. So all sorts of fun. theoptionsinsider.com/pro. Week 1 looking all right out of the gate for me, but we'll see. We'll see how it's coming down to the wire tonight. We'll see how I do. But speaking of seeing how we do, let's see who's joining us over here on the old Crypto Rundown. I'm pleased to welcome back on our old pal, Mr. Greg Magadini from Amberdata. Mr. Greg, welcome back to the Crypto Rundown, sir.
Thank you, Mark. Happy to be here.
I am missing the chance to beat you in fantasy football this season, sir. So, because I'm talking smack.
100% beat me because I have no idea what's going on.
I'm talking smack, but my team's not doing that great out of the gate. So, maybe that's why we need you in the league. I need someone I could take advantage of there, Greg. So next year, we will definitely have you in the rotation as we keep on rolling into a little bit of the old Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, let's get down to business with the Bitcoin Breakdown, the portion of the show where we break down all the action in the world's leading digital asset, which is, of course, Bitcoin. We got some fun ones for you in a little bit, Greg, when we get to ETH. But before we get there, we got to start with the big boy, which is Bitcoin. Looking almost identical to where it was this time on the show a week ago. This time a week ago, we were at 112,475, and coming into the show today, 112,384. So not that dissimilar, down less than 100 handles, which in the world of Bitcoin, just wait 5 seconds, you can move 100 handles out there, listeners. So not a huge move from our last show. Actually, that was 2 weeks ago because we were off, of course, last week for the Labor Day holiday here in the U.S. So 2 weeks and Bitcoin within 100 handles. That's pretty wild out there, listeners, which is probably what's going on, what's to blame for some of these vol levels. We'll get to all that fun in a second. But Greg, it's been a while since we've chatted with you, sir. The dog days of summer, maybe they're behind us. Maybe we got a little bit of rockin' September into October ahead of us. What's catching your eye in the world of the big dog, which is Bitcoin right now, sir?
Yeah, there's a few themes that are kind of catching my eye and that I want to keep in the back of my mind. So one is, if we're looking at the gold market, gold's been rallying pretty hard. So it's interesting to see that Bitcoin hasn't followed suit as digital gold, so to speak. I continue to view Bitcoin as a mix of risk on asset and digital gold. And so one of the things that we're seeing is despite gold having a $24 trillion market cap and Bitcoin having about a $2 trillion market cap, the relative underperformance over the past couple of weeks as rate odds are being repriced is kind of interesting. So that's something to keep in mind. And then something else that we're seeing interesting that I'm sure we'll talk about is the long dated skew, which has been positive, or risk reversal skew, I should say. So the 25 delta call being more expensive than the 25 delta put. That's been a persistent theme for past 2 years. And we finally just dipped into negative territory where the 25 delta put 6 months out is actually more expensive than the 25 delta call. And so the way that I read that is I definitely think that the investor base of Bitcoin is treating it as a risk asset. And so sort of the traditional equity flows of sell a covered call, maybe buy a protective put, starting to be priced in. And that really falls in line with a sort of structural decline in implied and realized volatility for Bitcoin. So both of those things going on. So it's kind of an interesting setup in terms of digital gold and risk on and what we can do here in the space.
I don't know, Greg. It's not digital gold anymore. The call premium is gone. I think the party's over. You're saying hit the bid, get out while you still can. That's what you're saying, right?
Well, that's definitely not what I'm saying, but I think there's some hedges to be made in terms of, isolating just the digital gold component and trading away maybe some of the risk on component, or vice versa if you want to play it the other way.
I may have put a few words in your mouth there, just a few out there, just for fun, listeners. But yeah, Greg is right. It has been interesting. We've been talking for a while about how anemic Bitcoin vol has been for most of the summer. And when you see it has moved barely 100 handles in 2 weeks net show on show, you can see these low vol levels are somewhat merited, at least. The weekly vol right now continuing to come in. It was nearly 37 on our last show, 36.85, which in and of itself is already pretty freaking low. Now we're down to a 35 coming into the show today. But again, it hasn't budged, so you could argue that it is definitely merited. Going out to the 30-day vol metric, a little more standardized vol metric, listeners, was at a 35 even on our last show, all the way up to a whopping 35.8 today. So just tons of juice out there available for squeezing out there in Bitcoin land. And if you want to go out where Greg's talking about, where the hodlers are hanging out, was at a 42.25 on our last show, still pretty much at that level, about a 42.15. So pretty close to unched out there. Skew-wise, though, as Greg mentioned, kind of interesting. It has not exactly been a hodler palooza out here over the last couple of weeks. On our last show, the weekly skew was predominantly negative, -5. It's still pretty close to that range right now, -4.15. Again, the weekly skew can move on a dime, so read that with a bit of a grain of salt. But monthly skew, a little bit more of a interesting factor out there. It was a -3.5 on our show last week. Continues to lean to the dark side, -4 today. And as Greg was talking about, that premium, which has been there in Bitcoin options since time immemorial, listeners, there's a few things, death, taxes, and you should be able to get some juice for selling out of the money call in Bitcoin, one of the certainties in life. Seems like, at least for right now, that is kind of going the way of the dodo. It was close to flat on our last show 2 weeks ago, and now it is fully at a -1. I'll have to go back and look, Greg. The last time, we probably flirted with it briefly, but the last time we had very bearish long-term skew, it's been a while, Greg, and probably was in the midst of one of the really aggressive downturns we saw, not just kind of hanging out, twiddling our thumbs like we are right now, Greg.
Yeah, exactly. FTX bankruptcy, SVB bankruptcy, those were kind of events that put in some negative skew. But ever since that recovery, the Bitcoin skew has remained, positive to the call side. So it's interesting to finally see that sort of shift in an environment where not only is vol low and nothing is happening, but we haven't had a big pullback in Bitcoin in quite a while, since I would say probably August of last year during that surprise interest rate hike from the BOJ that sent vol going crazy across the board. So it's kind of an interesting tell to see how people are positioning here right now.
Yeah, it's kind of wild. It's been over a year since the big carry trade unwind out there. So yeah, those are, as Greg mentioned, those are kind of very specific event risks that priced in some bias to the downside in this. Outside of those kind of aberrant moments, we haven't really seen it just right now, where not a heck of a lot else is really going on out there. So that does make it kind of interesting. Maybe we are graduating to another level, like Greg was saying. Maybe that's just a sign that Bitcoin options have graduated to a big boy market now. And certainly when we see some of these numbers I'm going to tell you about in IBIT for a second, you could be hard pressed to argue that it hasn't. The ADV right now, Greg, in IBIT, by the way, IBIT 64 even when we kicked off the show, up about $0.50 from our last show 2 weeks ago. But again, kind of treading water like we're seeing in the big Bitcoin as well. The ADV is up to 600,000 contracts now, Greg, 601 in IBIT. Today, almost 750,000 contracts, 747,000 contracts changing hands. So maybe that's to blame right now. I mean, over the last year, we've had this new vehicle come onto the horizon, Greg, allowing many more people than in the past to come in and do exactly what they want to do, overwrite the hell out of the upside in a lot of these names. So they're bringing that index mentality with them to IBIT. They're used to selling calls and buying puts, maybe in a SPY or in an SPX. And they're just bringing that mentality to IBIT, Greg, and they're putting up 750,000 contracts. So maybe that's just to blame as well. More people have access to these derivatives in Bitcoin than ever before, and they're starting to squeeze the last bit of juice out of that skew, Greg.
Yeah, I think that makes a lot of sense. And let's not forget that Bitcoin is not a dividend paying asset. So generating yield through option premium selling is sort of the way to do it. And not only that, but because it's a higher vol asset, it just generates more premium for the moneyness that you're selling. So that becomes interesting on its own. And sort of what we've seen since the launch of the spot ETF options, the IBIT options in November of last year, we've just been seeing a kind of a consistent structural decline in volatility. And so I think all those things tell us the same picture. And then the last piece of the puzzle is that risk reversal skew starting to be price negative to the puts, which is what we would expect in a risk asset class or in risk asset investor base.
Yeah, wild stuff out here in IBIT list. I'm just looking at what's lighting up the tape out here. And like I said, 750,000 contracts. It looks like about 300,000 of that coming in, so a massive all opening spread, which is kind of interesting. We have the October 70-80 vertical going up against, or maybe with, it's not a roll though, it's opening on both legs of the October 70-80 expiring on the 31st, so end of month. So a very, very tight time frame there. We all know, if you've been listening to the show for a while, end of month, typically end of quarter, but definitely end of month tends to line up a lot with a lot of the way Bitcoin and indeed crypto derivatives have traded for a long time. So interesting to see that 300,000 contracts going up in those. If you want the, shall we say, more normal size trade out there, it's 10,000 of the September 70s trading today for about 50 cents, expiring at the end of month. So again, end of month, expiring on the 30th for 50 cents. So if you like those, listeners, if you like a little bit of upside, 70s, 50 cents, I don't know. That's that could be a little rich, but then again, maybe we're talking about getting some premium selling the upside. Maybe take advantage of that if you want a little bit upside. There you go, Gray. You can hit the bid on some of those bad boys. But IBIT putting up more paper than ever out there these days. Speaking of some other names out here, let's get to Mara. This is the name I know a lot of our chat's been trading. I personally have been wheeling around in this trade. It's been a great wheel candidate. Once again, it was a while ago, then it kind of broke through its range, and now it's kind of back to its nice range, kind of vacillating in the 15 to 16 handle range, which makes it just an ideal wheel candidate. Hating out at 15 and a quarter today. Put up about 200,000 contracts. The ADV is back below 300K, 299. It's down nearly 50,000 contracts. So volume coming in a little bit, which is kind of interesting. By the way, if you're wondering, the hot option out there in Mara today, it's the 16 calls expiring at the end of this week, going up about 14,000 times for an average price of about 17 cents. So once again, if you wanted to do a little overwriting, there you go. Perhaps Mara is your huckleberry as well. Greg, have you been slinging any Mara these days, sir?
I don't trade Mara, but it's one of those digital asset treasury plays. They own a lot of Bitcoin, just like MicroStrategy owns a lot of Bitcoin. I think there's definitely some reaction to be had in those digital asset treasuries post the exclusion of MSTR to the S&P 500 last week. So it makes sense to do some trades in that.
Well, we know the M name Greg is really fixated on, listeners. Let's get to it now. It's MSTU, aka the product for degenerates. Of course, we're going to get to one maybe on ETH that might fit that bill as well, Greg. But MSTU, a little over $5, about 507 today, off about 20 cents. Putting up 35,000 contracts against an ADV of 42,000. This name is putting up 100,000 at a clip not that long ago. So maybe, Greg, maybe there's fewer degenerates out there in MSTU these days. What's catching your eye in MSTU, Lancer?
Yeah, well, I think that S&P 500 decision was a pretty big deal. I also think that since the peak essentially in 6 months ago in MSTR, where we had maximum premium to net asset value, we just seen a consistent compression of that premium. And so I expect that compression to continue. I think the more that digital asset treasuries come online, the more that this is commonplace, and it shouldn't carry a premium. Also, we've seen this in gold a lot, where people buy the miners hoping that they'll get some outperformance versus spot gold, and it ends up always being you should have just bought the spot gold. And so now that we have the spot ETFs for Bitcoin, it makes owning sort of a indirect product a little less interesting in my mind. We've seen a consistent come down of volatility for MicroStrategy, and a great way to play that is that 2x ETF MSTU. So I continue to keep that theme in my mind.
You know what, Greg? I think what's really killing the volume out here is just the name change to strategy. It's so boring. Strategy, it's terrible. Who wants to trade a name called Strat? That's what's killing all the volume out here. So instead, listeners, we'll keep on rolling right on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the Altcoin Universe.
All right, listeners, let's get down to business in the altcoin universe. Let's start where we like to do, looking at the market cap for this week. On our last show was Cardano holding down the number 10 spot at about 31.1 billion worth of market cap. Still Cardano coming in at number 10 this week, but a little bit lighter. 30.8 is what it cost you to break into the top 10, which again is wild. If you look back not that long ago, listeners, we were talking 9-10 billion to break into the top 10. So the rising tide has definitely lifted all boats. Number 9, it's our old pal Tron, 31.4 billion. Number 8 is Doge. Doge making some moves out there, coming in nearly 36 trillion, 35.9. Excuse me, 30. That'd be interesting. 36 trillion, 35.9 billion worth of Doge out there, listeners. Number 7 is USD coin, 72.5 billion. Number 6, it's Solana, 116.6 billion. Number 5, it's BNB, because of course it is. It's gonna be 122.3 billion. Number 4, it's Tether, 168.8. Number 3, Bill's wife will be happy yet again, hanging out at 177.3 billion. It's good old XRP. Number 2, it's ETH, 521.1 billion. And the big dog, Bitcoin, kind of treading water, hanging out a little bit north of 2.2 trillion worth of market cap. All right, out to ETH land. And ETH, unlike Bitcoin, not really treading water, giving up a little bit over the last couple of weeks. We were almost 4,600 on our last show, 4,585, down to 4,326. Still an impressive level given where we were just a few months ago in ETH when we were hanging out sub 2,000. So it's been quite the run out there in ETH land, but still managing to give back a little bit. Mr. Greg, what's catching your eye out there in apparently everyone's favorite again, all things ETH, Greg?
Yeah, I think there's an interesting trade setup in ETH. So obviously the $5,000 level is, the all-time high territory level to look out for, but it kind of makes sense that we get some consolidation below $5,000. It needs to be some sort of base formation, so to speak. But if I look at the term structure for Ethereum right now, it's a pretty flat term structure. And so there's some interesting sort of diagonal plays that I like to look at right now. Sell the September 25 delta call, buy the October 25 delta call type of thing as we kind of work through that base. And there's a clear line to trade against. If we get above that $5,000 level, that's sort of your stop. That's the violation line, so to speak, for the trade. So I think that's interesting. A flat term structure like we have now is pretty rare. We have also some news events coming online in October. We're supposed to get sort of the first decision around spot ETFs distributing staking rewards. I think that's a catalyst event for ETH accumulation, ETH staking, reducing the tradable float, all that good stuff that should be good for prices. So that's something to look at. And then lastly, ETH is more of a tech play. It's more of a Web3 tech play, more of a risk-on asset than Bitcoin. So another theme to keep in mind, which I find really interesting, as interest rate cuts are being carried forward and priced into risk assets, it was a little surprising to see the crypto space lagging sort of the price appreciation. Once those rates are priced in, where's the safety net? So that's something to keep in mind. So I think if you're going to get long ETH, find some risk off hedges, so to speak. And we listened to Vol Views on Friday and over the weekend. There's some great ideas there in terms of the VIX complex. And so there's some stuff to look at in combination to a crypto portfolio with that.
Great plug for Vol Views out there, Mr. Greg. A fun show. Again, if you're just listening to the Crypto Rundown, listeners, you are missing out on a whole heck of a lot of other great content out there. But yeah, let's crunch some numbers out here in ETH land. Vol-wise, we've been saying for a while, ETH, it usually is structurally more volatile than Bitcoin, definitely exhibiting that these days, even if it is coming back to earth a little bit right now. It was a little bit north of 73 on our weekly vol a couple of weeks ago, coming down to 64 and a quarter. Still nearly 2x what we're seeing on the weekly vol in Bitcoin, listeners. 30-day vol out here in ETH, about 71.5 on our last show, again, coming back down to earth. A little bit shy of 65 right now, 64 and 3/4. And going out to where the hodlers play, 67.5 on the 6-month vol, 66 and a third coming into the show today. And getting to what Greg was saying before about kind of the term structure out there. Weekly skew, again, not surprising, tilting towards the bearish right now. We have seen ETH sell off a couple of hundred handles since our last show. So again, not surprising that it'd be leaning towards the dark side. -1.25 on our last show. -3.25 right now. Similar tail out there on the monthly skew. We were at about a -2 on the show last week, coming in -3 today. Giving out to where the hodlers are hanging to the upside. We were just talking about how that premium has vanished, gone negative in Bitcoin. It was at a +2 still on our show last week. Coming into the show today, it's almost gone, not quite gone. It's a +0.5 right now. So again, in both of these major crypto assets that used to deliver a lot of juice, a lot of reward for overriding to the upside, not quite getting that same bang for your buck. I've been saying it before, I'll say it again, not to be a broken record, but make sure if you're out there harvesting the old risk premium, make sure the juice is worth the squeeze, or maybe as Greg was alluding to earlier, maybe start experimenting with some different structures than just the straight old sell the call for some yield or selling the put to get in, all that kind of fun out there. Speaking of fun, Greg, we have a lot of fun in the world of ETH-related names these days. It does seem, just in the last 6 months, let's say, the world of ETH-related names and the number of names playing the ETH treasury game has just exploded. And we got a new one to talk about today, Greg. But before we get there, let's talk about one of the other ones that came on our radar, I think the last time we were chatting with you on the show. This is good old BitMiner, a.k.a. BMNR, trading at a $44 today, down $6. The ADV continuing to climb, though. Nearly 250,000 contracts a day. That's up 60,000 from this time on our last show. Only 132,000, on the tape today. So a little bit lighter out there in BMNR. The vol down to only, I put only in air quotes, 104%. Down 24%. On the stablecoin front, Circle continuing to give up the ghost a little bit out there. 114 as we were kicking off the show, down another 11 points. We were just talking about 225, 250 not too long ago, and people selling puts on the 200 strike, 195 strikes. I know in a lot of our pro chat, people were selling puts at that level out there. So Circle coming back to earth quite a bit, down to 114. Putting up 66,000 contracts today against an ADV of about 150. that in and of itself has come down 17,000 contracts since our last show. The vol out there in Circle down to only, I put only in air quotes, about a 72, which again, if you were watching this name just a month and change ago, the vol out there and certainly the put premiums were a lot more attractive. And then last but certainly not least, Greg, the name that just came across our tape just an hour and change ago on our option block show as we were scanning for some unusual activity, and it just lit our chat on fire, lit our show on fire on the option block. We have to discuss it here. This might be my new favorite ticker. Are you ready, Greg? Are you familiar with the new hot name known as ETHZilla, sir?
I am not.
All right, there we go. That's what I love to hear. ETHZilla. Ticker symbol ETHZ. It does exactly what you think a name like ETHZilla would do, Greg. It buys a whole bunch of trading $2.45 today, putting up 32,000 contracts today against an ADV of only 13,000. So ETHZilla coming on our radar. I believe it was the October 3s that were lighting it up for size today, which is what got it on our radar today. Yeah, trading $2.50. It has rallied now. Yeah, 13,000 of the October 3s have traded for around a quarter today, Greg. So I really just wanted to mention this on the show just to have an excuse to say ETHZilla, and then to also put this on your radar because this is a wild one. Our chat is already pricing up the straddles and selling those against the wings and everything else. There's a lot of fun you could do with this name, Greg. So I really just wanted to put this on your radar and get your reaction, sir.
Yeah, I mean, the name ETHZilla is a monster. I love it.
Can you imagine rolling into, I don't know, a VC office or wherever you want to go raise some funding and say, hey, I'm looking to raise funding for my next event. What is it? Oh, it's ETHZilla. And yet the fact that they have managed to raise some money, they are buying back their stock at a fairly impressive clip. So they're raising money to go buy back their stock, which is not a thing you normally see in these types of names. So yeah, again, the end of the day, I really just wanted to say ETHZilla a bunch of times on the show. But yeah, might be one of my new hot names. This might be a fun one to trade around in a bit. If you're feeling adventurous, this is not for the timid. This is for the degenerates of the world, listeners. But if you're willing to maybe to leg into something here, I know some of our listeners are already doing covered calls on others, selling puts, others selling straddles and looking to buy the wings, so kind of legging into iron condors. But there's a lot of things, or iron flies even. There's a lot of things you could do with this name, but it is kind of wild. So, Greg, have we given you a new core holding on the Greg Magadini portfolio? Are you going to put all your assets into ETHZilla, sir?
No, I'm certainly not going to do that. That is pretty funny, though. I will definitely check it out as a trading instrument for sure. And the other one that's still interesting to me is Circle. I definitely like Circle. There's some setups that occur. We saw a nice setup on Friday. So essentially in the morning, risk assets rallied off non-farm payrolls on the back of interest rate cuts. So Circle opened up high and sold off all day, which makes sense because right now the way the market is treating Circle is as a company that earns yield on interest rates. So that's sort of the short-term to medium-term vision for the profitability of Circle. So risk assets rally and then Circle underperforms as the market sort of wakes up to the reality of lower income for the company. But in my mind, I still view it as an interesting long-term play because earning interest on reserve is step one. If we actually get digital cash and the market caps expand drastically, there's a lot of levers to be pulled there. So to me, Circle is the Netflix of emailing DVDs. We're at that phase. In the future, my thinking is we're going to get the streaming phase. And I don't know what that looks like yet, but that's kind of where my head is at on that asset. And again, selling puts on that is interesting because as the price comes down, vol came down a lot. So it created a nice forgiving way to either buy back to put and unlock the capital to buy the shares or do other structures that one might find interesting. So it's definitely something I still look at. It's still on my radar. To me, this is not the end of the story for Circle. That's for sure.
The Netflix of the stablecoin era. Interesting. Big word. I guess what the question now is then what is going to be the house of cards of Circle that really puts them on the map? out there, the big streaming show that kicks them off. But you're right, it was an interesting scenario. People might say, oh, if you wrote puts out there, you got run over, and potentially on the strike side. But you're right, the vol collapsed so aggressively, and the put wing collapsed so aggressively that you still could have done all right on the vol collapse, even if maybe you were wearing it a little bit on your strike selection. And certainly, if you're of Greg's ilk and you think this is the Netflix of the stablecoin era, then you don't mind having some put to you at various levels here or indeed above. So interesting stuff. Are you down for that, listeners? Is Circle the Netflix of the upcoming stablecoin era, or is it really, Greg? Is it really ETHZilla? You know, I think I've been doing ETH wrong this whole time. Why am I messing around with the spot, Greg? I should just be paying ETHZilla to do it for me. I've been doing it wrong. I need to rectify that after the show, listeners. So look at that post haste. ETHZilla for the win. Let's go out here, run some more down here in the world of altcoin, then see what else is burning a hole in Greg's wallet out here. Solana looking good, back north of 200 again, listeners. If you've been riding the Solana train for a while, I know a lot of our pro members were doing that as well. Reallocating, re-nibbling, if you will, when it got back in the mid 100s or below, down to 125 again. Looking pretty good right now, 215.5. That's up from about 197 and a third on our last show a couple of weeks ago. It's up a little over 18 handles. XRP, it's kind of locked back in that. When it was locked at 52 cents for about half a decade, listeners, it's kind of locked at around this $2.97 level. It seems to be just glued to the three strike. Can't really get out of its own way. It is literally unched from where it was 2 weeks ago. But again, it's not losing a lot of value. So I suppose if you're an XRP believer, then that's some solace for you. Dogecoin rallying a bit, about 21, almost 22 cents on our last show, and almost 24 cents today, 23.8 cents. So gaining a whopping 2 cents since our last show, listeners. Litecoin 111.68 last show, 112.80 today, so gaining about $1.12. Cardano 87 cents last week, 86 cents, so down about a penny. Polkadot 385 on our last show, 403 today, so up 18 cents. And everybody's favorite, Shiba Inu moving in the right direction. It was a million zeros, 1234 a couple of weeks ago. This week it is a whopping 1290. So put those hubcaps back on the Shiba Lambo. It might be in the offing. Greg, we talked about a lot of stuff. I'm not sure if anything could top the monster that is ETHZilla. But that said, if there's anything else burning a hole in your wallet you want to share with our folks in the altcoin universe, now is the time, sir.
In terms of altcoins, nothing jumping out at me. In terms of trade setups, I think it's a very interesting time to look at the Bitcoin basis versus the Ethereum basis, especially if we get these ETH staking ETFs approved. Basically, you get to own the ETF that pays out staking yield, and you get to sell the CME future against it. Theoretically, that basis should be cheaper than the Bitcoin basis that doesn't have an ETF giving you yield. So that's a little bit of a hint of where to look at, type of trade to be done. I think that's a really interesting corner.
Speaking of interesting, let's get out of here on a real quick crypto question.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the crypto questions. And we did have a question for you on our last show, actually, stemming around our conversation we've been having for a while, whether it's new products that CME is listing or just about every exchange out there that's listing any sort of crypto derivative these days. 99.9% of them are all cash settled these days. It seems like the era of the BACs and the Ledger X is getting in there and bringing physically delivered, physically settled contracts to the space. Seems like it's kind of done, but we thought we'd put it out to you folks. We said, hey, are physically settled crypto derivatives dead? Do you see a need for them, or do you only want cash settled contracts going forward? And Greg, over 2/3 of over 3/4 of our audience, actually, 76.2% said they want cash settled only. They have no time for physical delivery. And less than a quarter, obviously, 23.8% saying physically delivered contracts are still viable. still needed. By the way, really quickly, we had a question here from Forrest Gumpit as well on this question. He asked, would it be useful to explain where each type of these contracts has an advantage for trading? Well, Forrest Gumpit, everyone else out there who's wondering, the physically delivered, physically settled stuff, the reason it was popular early on because a lot of the use case was people were already holding spot or some sort of underlying contract. So it made sense to have the derivatives component be an addendum to that. You wanted to write calls against the Bitcoin you already had, for example, and collect yield against it. And if it got called away, you actually had a vehicle to sell some of your Bitcoin. Vice versa, selling the puts to get into the underlying. Everyone thought that was going to be the predominant use case. And that's the real major difference with physical delivery versus cash settled. Cash settled is just simplicity itself. Your account is just debited or credited. Cash settlement is really just for the simplicity, ease of use. You don't have to deal with the hassle, the logistics, the capital requirements of moving a lot of underlying into and out of your account. And for a lot of the retail audience, which is the primary audience of this show, it's just the easiest way to go. You don't want to deal with the hassle of using and trading and buying and selling the underlying. If you're a big institution, you want to list an ETF or something like that, the physical delivery is probably for you because you need to move a lot of the underlying out there. But for a lot of you out there, that's really the predominant difference. If you have a lot of underlying, you want to collect some yield on it, or you want to get into an underlying position, physical delivery is for you. For everyone else, cash settled is the way to go. That said, Mr. Greg, what are your thoughts on the results of our poll? Do they surprise you that 3/4 of our audience is only into cash settled? And do you agree with that? And do you think there is a world where these physically delivered crypto contracts can make a comeback?
Yeah, so I think there's two distinct types of crypto investors, and the DeFi crowd lives in the physically settled world. So if you look at DeFi options, DeFi futures, and perps, all that good stuff, it's all physically settled. Even like for a Deribit, for example, it's cash settled into physical Bitcoin. So you get the difference paid in Bitcoin of the cash difference. Now, one of the reasons that's so interesting in the DeFi world is because you have 24/7 markets. One of the hard parts of physically settled in traditional finance is, let's say you're trading a butterfly, and at the end of the trading session on Friday, the market closes right at the belly. How do you hedge that? How do you know if you're going to get exercised on your short belly on both contracts, one contracts, no contracts? At the end of the day, you don't really find out until your Monday morning session. There's a lot of pinning risk in terms of if you're going to get exercised or not at that particular strike. If you have 24/7 markets, that's easy to deal with. If you don't, and you're going to carry an unknown exposure over the weekend, that's really tricky. So in that sense, the cash settle is so much cleaner to deal with than the physically settled. And then in the DeFi world, if you're working with the physically settled, at least you have the 24/7 markets, and all the ethos of DeFi is, not your keys, not your wallet. So physical makes sense. You don't necessarily want a central clearinghouse to do cash settlement.
Needed some of those DeFi folks to vote in our poll, Greg. They were all cash settled all the time. That is a good point about Deribit, though. It's cash settled, kind of in name only. You're still slinging a little bit of Bitcoin there. But that is going to do it for us on the crypto rundown this week. Wow, a fascinating journey, Greg. We went all over the place. We started in Bitcoin, went to a little bit of ETHZilla, everyone's favorite. We ended on physical versus cash settlement, all kinds of wild stuff on the show this week. That said, Mr. Greg, if folks are intrigued, they want to check out all the cool stuff you have cooking over there in Amberdata land, where should they go? What should they do?
Yeah, please visit our web application at pro.amberdata.io. And if you want to listen or read some of my weekly thoughts on the market, go to amberdataderivative.substack.com.
Check them out over there. Great newsletter over there as well, Mr. Greg. I can enthusiastically endorse that. So if you want some insights from Greg in between his appearances here to talk about ETHZilla on the show, then make sure you're checking him out over there. That's going to do it for us on the Crypto Rundown. Not going to do it for us on the network, though. Back again in about 45 minutes after the closing bell to break down all of the action. Will ETHZilla make it onto the Hot Options Report? Well, you got to tune in to find out, listeners. All of our pro folks will be back live in about 45 minutes. With that, all the rest of you listening after the fact, yet another reason why you should be subscribed to the full network. You get the Hot Options Report coming at you each and every trading day. Then, of course, we're back with our usual array of content throughout the week until we're back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amberdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amberdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amberdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.